Hello, everybody. Good afternoon. Happy New Year. Got a slide deck we're going to go through here shortly. Just the building blocks that I see for real estate agents. Sorry, that was a little echo. Just making sure I actually went live here. Um, we're going to go over the building blocks for real estate agents. And I actually find that a lot of higher earning agents don't even do these fundamental steps. So, it's January 8th, 2025. We're into the new year. Let's get the new year started off on the right foot and let's make sure that that you're getting things set up properly so you're in a good spot come tax time. So good afternoon. My name is Cody Goldsworthy. I am the owner of NIT CPAs. We are the CPA firm for real estate professionals because we help our clients save thousands in taxes each year. My firm is based out of Grosse Pointe, Michigan, but we operate completely virtually. We are really the go-to spot, I guess, the one-stop shop solution for real estate professionals. Everything from, with accounting and finance, we really handle A to Z and bring our clients, from beginning of making less than 100 grand to making over 250 grand as an agent. And that's actually going to be what the next 3 weeks are. So today it's going to be when you're making less than 100 grand, just those fundamentals, make sure you're doing them. And even if you're making more, then it's even more important that you're doing these steps. And then next week we're going to go when you're making between 100 to 250. And then the final part of the series will be 250 scaling onwards and upwards and what you should be doing. Real quick too, like I said, it's January 8th. We are finalizing our tax return roster for 2024 tax returns. If you are interested in becoming a client, even though, we're out of 2024, not much planning we can do, come in, become a tax preparation client. We're obviously going to get into the weeds of your tax situation because we're doing your tax return. You'll learn how we operate, see if it kind of jives with how you like to operate. And if you like the work we provide, you think we provide a lot of value, we can hit the ground running in 2025 from a tax planning perspective because we just did your tax return. We know what your situation is. We can kind of hit the ground running there. So I do have a slide deck prepared that I'm going to share real quick. And it'll kind of guide our discussions today. So, as the title says, agents, commissions under 100 grand. If you're a new agent, go through these step by step. Make sure you're doing these things. It's going to put you in a great situation when you go to find a tax preparer. Maybe you're self-preparing now. You're not making the income that it needs to, I guess, justify in your mind hiring a tax professional. That's fine. Go through these steps. Make sure you're in a great situation so that when you do start hitting these different income levels, you're in a good spot. So like I said, today under 100K, next week we'll handle between 100 to 250 and then 250 plus after that. So first step, set up an LLC for yourself as an agent. This does two things. First thing, or it does a couple of things, but the first thing is that it gives you S corporation insurance. And what do I mean by that? We find that a lot of our clients save a lot of money in taxes by electing this S corporation status. And there's kind of an income threshold for this, right? If you're making 50 grand as an agent, being an S corp is not going to be advantageous to you because there's just not there's not enough opportunity to save you money in taxes with an S corp to justify the cost of doing so. Running an S corp's expensive. You got to run payroll to yourself. The tax return's more complicated. There's just a lot more compliance and nuance to an S corporation. So if you're not making enough money, it might not be worth it. Usually I see around 70 grand, you're going to pay us, you're going to pay us what you're going to save in taxes. So there's no real ROI there. But then once you get past the 70 grand, there is an ROI aspect to it. What setting up an LLC does for you is, okay, we're in 2025 now. Let's say you're a brand new agent and you're like, I might make 60 grand this year, let's just say. If you set up an LLC now and you're going through the year, maybe rates come down and the market just explodes. And now we're in October and you're sitting there with $90,000 worth of commission or $100,000 worth of commission. You cannot elect S corporation status for 2025. It's October. You don't have an LLC, it's too late. Whereas if you set up this LLC at the beginning of the year and it's October, we can backdate that S corporation election so that you can elect S corporation status for all of 2025. And that first year, that might save you 15, or that might save you like 12 grand in taxes right there. So it really, it legitimizes yourself as a business too, right? Like you are a business owner, you're receiving 1099 NEC, non-employee compensation. You're not an employee, you're a business owner. So act like it, right? Set up your LLC. And then what we're going to get into next is what an LLC does is it allows you to establish business accounts. So once you set up an LLC, you can go set up a business checking, a business savings, a business credit card. And like I said, this really legitimizes you as a business. And, you know, how do I want to say this? So hopefully you're paying in your quarterlies. We'll get into that in a little bit, but this just keeps your bookkeeping so much cleaner, right? Like, okay, you're an agent, you set up your LLC, you take your LLC documents to the bank, you get your credit card, you get your bank account set up. You have your broker sending all of your commissions to that bank account, all your expenses you're routing through your credit card, through your business checking account. Your bookkeeping is so much cleaner. And if you do end up going the S Corp route, you're going to want your bookkeeping to be clean. Your bookkeeping is so much cleaner. If you don't have the money to hire a bookkeeper, you don't have the money, you want to do you want to do your tax returns yourself, you want to pay in your own quarterly estimates. Well, having these business only bank accounts and credit cards are going to make that so much easier on you come tax time. And when it comes to paying in your quarterly estimates, right? You weren't an agent last year. You probably don't know much about paying in quarterly taxes, and you don't really know how to estimate it. Well, if you can pull your credit card statements and bank statements year to date and be like, all right, it's Q1, this is how much I spent, this is how much I brought in, let's back out some mileage. Now you pretty reasonably know what your profit is in your business, and you can go ahead and pay in your quarterly estimates, which will keep you, or it'll at least get you pretty close to what your quarterly estimate will be. And you know, digging through like these personal bank accounts. I mean, we get clients all the time that come to us that are commingling funds between, their mortgage is paid out of their bank account, their commissions are going into that bank account, they're paying for gas out of that bank account. It just becomes an absolute mess when they're trying to clean up their bookkeeping. And we find that we increase taxable deductions by like 30% when we take over the bookkeeping for an agent or a broker. Like there's so much missed opportunity when it comes to saving money in taxes by missing these expenses. Um, is there anything else I want to say on this? I don't think so. That should be pretty much it. But get your business account set up. That's really important. Next, keep good records. We already touched on bookkeeping a little bit. Let's talk about mileage here for a second. I really like MileIQ. It's an application. You download it on your phone. You can leave it running all the time so that it's tracking your personal and your business mileage. But the trouble that I see a lot of agents get into is they have no way to substantiate their mileage, right? I mean, maybe they're looking at their odometer at the beginning of the year, the end of the year. I probably drive 80% for business. That's my mileage. Cool. The IRS doesn't care about that. They have no way to substantiate your mileage. At a bare minimum, what I like to see is when you get your first oil change of the year and your last oil change of the year, keep your sticker, right? Now we have some sort of documentation as, okay, we traveled 20,000. Like, I think the thing a lot of people miss with this is when you don't have any sort of documentation for your mileage, they don't even know if your car traveled 20,000 miles, let alone you telling them that you traveled 20,000 miles solely for business, right? So at least with this sticker, you can say, hey, I'm an agent, I made 100 grand and my car traveled 30,000 miles. The IRS might be like, okay, it's pretty reasonable to expect that 20,000 was for business, right? But when you have no way to document your mileage, you're gonna have to pay back in those taxes. There's no way around it because you have no way to substantiate it. And what I like a lot about like MileIQ, even if you have it running when you're doing personal errands, if you do travel a lot for business, let's write off all your mileage. And if you pull an audit, right, what are they going to do? They're going to sample it. They're going to say, all right, give us your mile log is the first thing they're going to ask for. So at least now we have a log we can send them. With the amount of traveling you're doing in a year for business and personal, right? There's going to be a lot of trips in there, and they're going to put it into some software and they're going to randomly select a bunch of samples. Well, if you do travel a lot for business, chances are a lot of those are going to be business and all of it's going to be allowed. But let's say, they pick two of their selections are for personal. Now, 2 out of 10, right? They're just going to disallow 20% of your mileage deduction. So at least you have a leg to stand on, and you're probably going to be able to keep a lot of that mileage that you did end up taking. And but back on the bookkeeping again, like I mean, literally every single expense that you incur while being an agent should be run through your business credit card and business bank account. Travel, gas, grabbing a coffee, buying stuff for an open house, meeting with clients, whatever it is, make sure that you are routing it through those business accounts. Um, and one thing too, so I actually think this is the next. Yeah. So I always recommend, like I said, hopefully you're paying in your quarterly estimates. And I think that I actually might even be the next bullet point, but I like to recommend that people save at least 30% of their commissions for taxes. It tends to be a pretty good rule of thumb when you take into account your federal and state, and then the self-employment taxes you pay. It usually ends up being around that 30% mark. Just if you even set up an auto rule in your bank where 30% of the money coming in gets thrown to a savings account, that's a great start. And then every quarter you can pay in your quarterlies with that amount if you'd like. Or you can get a little bit more accurate by actually doing your bookkeeping. But saving this 30% at least, relieves a little anxiety, and you out of sight, out of mind, put it in that savings account. You don't even have to worry about it. But like I said, in a perfect world, you are paying in your quarterly estimated taxes. I did a training, well, it wasn't really a training, but I presented like 2 weeks ago on my Facebook, going over the taxes you owe. I think it was if you're making 200 net income and then 200K net income. If you are making 100K in net income and you don't pay in any quarterly estimates, you are going to pay over $2,000 in fees, penalties, and interest. This wasn't such a big deal a couple of years ago because interest rates were so low. We're not obviously not in that low interest rate environment anymore. So especially my high earners, we're seeing some pretty exorbitant penalties, fees, and interest come tax time. So make sure you're paying in your quarterly estimates. It's really not that hard, right? Just go to the state website, go to the IRS. You can easily figure it out, pay in your quarterly estimates. And if you want nothing to do with taxes, you want to completely ignore taxes like they don't exist, just hire a tax professional to pay in your quarterly estimates for you. I think in the example we walked through a couple weeks ago, if you're making 5 grand, or if you're making 200,000 net income, you're paying 5 grand in fees. Just hire a CPA to pay in your quarterlies and file your tax return. The worst thing you can do is go in at the end of the year, pay their fees to file your tax return, and then when they're going to file your tax return, you're going to have to pay all these penalties, fees, and interest. Just pay someone to do it for you. You are gonna save as much in penalties, fees, and interest as you're gonna pay the CPA to just go ahead and take care of it for you. So you might as well just get it done. And it's just good business practice too, right? I feel like agents always think that they're held to these weird rules, right? These are just business rules. I used to work in corporate America, tracking your mileage is a requirement, tracking your expenses and taking pictures of your receipts. That's a requirement when you're working in corporate America. So take it over as being an agent, right? You're a business owner now. Make sure that you are set up and in a good situation, so you're not having to deal with this stuff. So those are my steps. Set up your LLC. With that, you get the S corporation insurance. That first year, you make a substantial amount of income. Join my firm. We'll be able to save you a lot of money in taxes in that first year. Two, establish your business bank accounts. Credit card, checking account. All income comes in, all business expenses going out. Your bookkeeping is a breeze. Keep good records. Bookkeeping, make sure you're actually capturing everything. I feel like some people tend to be a little bit shy when taking tax deductions. I mean, they're yours. You're eligible to take them. Take them. Same with mileage. Just set up Mile IQ and have it track all of your trips. And in a perfect world, quarterly, you would sit down and back out all the ones that were for personal, or you can match them. I think you can say, hey, this one is business, this one is personal. I would prefer you did that on a monthly or quarterly basis, but at the very least, at least we have a log now, and we can say, hey, the truck actually did travel 50,000 miles, and this person's making a substantial amount of income being an agent. Most of their mileage is business mileage, and then save up for taxes and pay in your quarterly estimates. it's such stupid money spent. I always think it's funny when people give me a hard time for my tax preparation fees, but then when we go to file their tax return, they're spending 3 grand in interest because they didn't want to pay us to pay in their quarterly estimates and they didn't want to do it themselves. It's just a waste of money. So make sure you're getting those paid in. All right, that's it. Well, thank you all for joining me today. Next week, we'll be going over what you should be doing if you're between 100 and $250,000 in net income. Again, if you are looking for tax preparation for 2024, reach out to my firm. We'll get you in the door. You can see what it's like to work with us. And then if we see some planning opportunities, we'll make sure to hit the ground running and get on a meeting with you early 2025 to get started with it. Awesome. Well, thank you all and have a great rest of your week. Bye.